The stock market is worth billions of dollars, and it has been a source of profit for numerous individuals. However, most stocks have recently been on a decline, and amidst fears of a recession, the future of the stock market is uncertain. With the amount of speculation right now, no one can really tell what is bound to happen in the coming months. But one thing is certain: a disastrous market collapse will soon happen. This is evident as billionaires have been selling all the stocks in their portfolios. Stick around as we dive deeper into this. Thanks for all the support you've shown our channel. Let's dive right into the video. Michael Burry, with the exception of one stock, actually liquidated all of his shares in the stock market. What do you believe the explanation for this is? There will be soon a market collapse on a scale never seen before. Burry referred to it as the greatest speculative bubble of all time in all things. He invested approximately $165 million in 11 stocks last year. But according to documents from the third quarter, he liquidated more than a third of his stock holdings, bringing his portfolio's value down to just 6 stocks and a little over $42 million. If Michael Burry were any other investor, we probably wouldn't pay him any mind. However, he is not your average Joe. When the dot-com boom was in full swing, he correctly anticipated that it would burst and profited by betting against the market. He made his investment in GameStop before the company became so popular that it drove hedge funds that had shorted its shares into bankruptcy. But that wasn't the reason he was so well liked. His most significant investment occurred prior to the market meltdown in the housing industry. He had done some research and concluded that the market was in a bubble that was going to pop. Thus, he risked everything on a prediction that the housing market would crash, a move that was widely seen as foolish at the time. However, Burry and his investors emerged wealthy. As a result, if Michael Burry spots a bubble, there is a strong possibility that a bubble is about to emerge. It doesn't take a genius to figure out that the measures taken by the Federal Reserve over the past few years are what produced the bubble. No sector is immune to this phenomenon. Bubbles are forming all across the board. In the past 2 years, home values have increased by about 50%, while the value of cryptocurrencies has soared to the trillions of dollars, despite contributing little to the economy. As a result of easy credit driving stock values to new heights, Michael Burry has dubbed the current market bubble the greatest bubble of all time. The timing and mechanism of its eventual burst are unknown, but one thing is certain: the anguish it causes will not be pleasant. Let's investigate the stocks that the super rich are selling. In the face of economic volatility, what kinds of investments do billionaires make? When will the ultimate financial bubble burst? All of these queries, along with a lot more, will be addressed. Billionaires have been selling their stock holdings in large quantities beginning in the second part of the year 2021. Why? Because everyone is bracing for the impact of the upcoming crash. The market did indeed collapse. Therefore, their predictions were correct. However, the downfall is just beginning. The wealthiest individuals in the United States together sold $43 billion worth of equities in 2018, which more than doubles their total of $20 billion from 2020. Even though we are experiencing practically double-digit inflation, Warren Buffett is reportedly holding a cash hoard that is worth more than $30 billion, as reported by Bloomberg. Of course, he has put a lot of his money into the expanding oil and gas industry, so his cash this year is lower than in previous years. The earnings made by oil firms are among the largest ever. This is likely to go on for 1 or 2 more years. But even so, $30 billion is a significant amount of money. The question then becomes why Warren Buffett is not making investments with that money. Having stocks instead of cash is preferable, right? It's a bit of a yes and a no, to be honest. You have to consider that a dollar invested today is worth more than the same dollar invested tomorrow, and that profit is the primary focus of any enterprise. Naturally, you are free to assert that the company exists to produce high-quality goods, improve the planet, or whatever else you choose. However, money is ultimately what investors are most concerned about. Therefore, the monetary factor should be prioritized. This is the core idea behind capitalism, yet not all forms of money are created equal. A company's current profitability has a much greater impact on its value than its projected profitability. Put that cash to work for you in a different venture, and you'll soon be flush with profits. There is a direct correlation between time and wealth. Therefore, the company may bring in $10 million in revenue, but due to the passage of time, its actual value will be lower. If the Federal Reserve decides to raise interest rates, what impact would this have on the previously discounted rate? As it grows, the present value of a company's future cash flows become less attractive than the present, causing stock prices to collapse. This is especially true for technology businesses, which are typically focused on generating a significant amount of revenue in the future after increasing market share. The current range of interest rates is from 2.25% to 2.5% as of writing. Despite this, the inflation rate is still quite high, hovering somewhere around 9%. Also, Fed Chair Jerome Powell has been very vocal about his willingness to do whatever it takes to get inflation down to a manageable 2% to 3%. Exactly what does that imply? High interest rates for an extremely extended period. Perhaps things will return to the way they were in the 1970s. Consequently, what does that imply? Future cash flow will lose a large amount of its value, causing corporations to lose value and consequently causing a stock market catastrophe. Those organizations that are willing to risk their capital right now will, without a doubt, find the most success. But when you're dealing with technology companies like Meta and Google, their focus is always on the years to come. This isn't going to be your average downturn at all. From 2020 to 2021, 80% of the currency in circulation was created. Bubbles in every industry were also produced, in addition to the tremendous inflation. There is a bubble in virtually every industry you can think of right now, including cryptocurrencies, real estate, and stock markets. Burry is adamant that the worst crash ever will soon occur for this reason. Because of this, he and other billionaires are attempting to sell off as many shares of stock as possible. They won't be able to sell everything at once, since doing so would provoke a market collapse due to an excess of supply. Furthermore, a crash is not necessarily catastrophic. Prices will rise again, but you'll have to be patient and wait a few years for it to happen. 5 years after the 2008 catastrophe, prices had recovered to their pre-crash level in 2007. Those who invested in real estate at any point, including the height of the housing bubble, will have made a profit by the year 2022. Time is a universal healer. The sole stock that Michael Burry didn't sell was that of the publicly traded Geo Group, which makes investments in private detention centers and psychiatric care centers in the United States, the UK, South Africa, and Australia. That's not exactly encouraging. It would appear that Burry is certain only of one thing. Even when the mother of all bubbles bursts, individuals will continue to be sent to prison. Michael Burry prefers short-term gains instead of steady returns on long-term investments. He has engaged in stock trading, shorted Tesla, profited from GameStop, and other investments that most people would not choose to do. A Buffett approach is far more applicable to the typical person. Warren Buffett has made investments in businesses that are currently profitable, businesses that can increase their prices as a result of the crisis, such as oil and gas firms, businesses that produce essentials such as iPhones, or discounted banks like Ally Financial. There is an opportunity hidden behind every catastrophe. Inflation is a global problem, yet companies that make chips and are involved in the oil industry are doing extremely well. What are your thoughts on the upcoming market crash? What do you plan on doing to protect your portfolio from it? Give us your insights in the comments section down below. If you enjoyed this video, give us a like and subscribe, and we'll catch you on the next one.